Welcome everybody to a new analysis of Tradomics. My name is Dario. In this episode, we're going to have a look at six main green energy stocks based in US. So let's get it started immediately with Enphase Energy. I mind you that this episode takes once every month, and every time I start a new video, I always challenge what I have said during the last video, so you have a complete transparency about the methodology and the results of the quantitative analysis. So in the last video, actually, I was saying that due to the fact that here we could have had an absolute low and the beginning of a big cycle, which is T plus 4 or T plus 5, we could have had potentially a double bottom. From this candle here, we went further down until the 23rd of January 2025, reaching the level of $58.85, which was not lower compared this low at 58.33. We could have extended further the downtrend because, as said, we had to complete the weekly cycle up to 11 days, but in this case was just 7 days, and then this green candle was then the beginning of another weekly cycle. Um, this low here that was done subsequently on the 3rd of February 2025 at is low at 59.6, so which was really close to the 58.85, but not lower. For a quantitative analysis, this makes absolutely a difference compared to a technical analysis, because in the technical analysis we can have different levels of resistance and support, which are approximately referred to an area that is, in this case, around 58, 59. But the fact that this low was not lower compared to this low, and this low was not lower compared to this low, up to the 1 cent of dollar, this makes us the life easier to segment the chart. So first of all, here we add a new weekly cycle. But this weekly cycle is part of this new cycle that started last year. And here we add 44 days. So here we have already a T plus 4, a 6 month cycle, and potentially we are close to already a duration of an yearly cycle, which means that this low, it's a critical point to have either further downtrend or further uptrend. If in the next weeks or months we're going to go lower this low, then we will have a further downtrend. But if this low will not be broken, then we will have the beginning of a T plus 5 cycle that might be even positive. Okay, so of course it's too soon to say that, but here it's first consideration. Then the second consideration is that from this low here, given that this low was not lowered compared to this low, we have a new monthly cycle. So here we can update the chart. And from this monthly cycle, we have had the first T plus 1. This is a downward cycle that is a neutral one, because the low in which it ended was close to the low from which it started, and the duration was 14 bars. Okay, so the analysis compared to the last video was correct, because after this low we started a bit of a further uptrend, short-term uptrend. Now we have to look at the upward cycles and try to get further insights. So compared to the to what has happened during this month, we can say that from this top here until this top here, we have had 37 bars. And if we stretch the total duration until the top that was done on the 19th of February, we have 46 days. Now, 46 days is the duration eventually of a T plus 2 hybrid cycle, a monthly upward cycle. But it's reasonable also to consider the beginning of either a T plus 1 or a T plus 2, not from this top, but from this one on the 5th of February 2025. So here we can have a T plus 1 slash T plus 2, and we have the condition to have a T plus 1, T plus 2 in this case. I take this top as a T plus 1, T plus 2, and not this one, because the hybrid cycles are pretty seldom. So the higher likelihood that a T plus 2 was done from this top is higher compared to this one. Of course, if from the next week we will see further downtrend, then we have to consider this top as the beginning of a T plus 2. But as far as this low will not be broken down in 2 or 3 weeks, then we have to consider this top as a T plus 1, T plus 2. And I always put the arrows towards the higher likelihood that the price will follow that pathway. So considering that here we have already a positive cycle, because this top here on the 19th of February was higher compared to the top of the 5th of February. And if you gauge the total duration, you will see that this is a weekly cycle because we have 9 days. Then the expectation for the next week is to return back to the absolute lows here over the short term at $70.78 and proceed further to the uptrend. And one of the first target will be this one at $76.90. Okay. We are not starting a new T plus 5 with a high strength. This is something that we have to take in account or into consideration. But if we will go even lower than this top here, we will have our double bottom figure, okay, which is made of the different cycles as I'm describing to you. Okay, so that's the situation we have on Enphase Energy. So have a look at the stop for the next week, 70.78, and eventually if we go lower this low at 60.26, then we will have a T plus 2 from this candle. Okay, but the higher likelihood is that we will continue to go up, because here we have a positive cycle that is at least a T plus 1. And cherry on the pie, we can return back to $70 in a time range that is encompassed between 13 days, so between the 24th of February 2025 until 23 bars, which is until the 10th of March 2025. So you have precise indication from this channel. On first solar, as for the last analysis here, I was saying that potentially we could have had more further downtrend, especially because this low could have been not just a T plus 1, but a T plus 2. And if we gauge the total duration from this low here until here, we add 23 bars, which was not really enough to have a T plus 2. But I was saying that eventually we could have had a T plus 1 and then something new. But the market revealed that this was a T plus 2, because now the absolute low that was done on Friday reached the duration of 40 bars. So now we can update the chart, and here we can put a T plus 2. And we have here a T plus 1, downward cycle, of course. And now we have to see what is next. Always during the last video, I was saying also that we could have expected a hook back to the upside because we want there was already time to close a T+1. We didn't had exactly this same shape, but we had something a little bit different, but still that gives you the idea about this hook, which was this one. Okay, then we add another weekly cycle, and then here another weekly cycle. Okay, so now here we have to make some consideration because next week we're gonna have the earnings release. So first of all, from this T+2 to this one, we add 42 bars, 42 bars. So here we can have a T+3 because now we have already a lot of bars below this low, below that top, sorry. So we can update the chart with a 3 months cycle, upward cycle. From this upward cycle until this top, this relevant swing, we have 27 days. Okay, so here potentially we have the beginning of a T+2. But we know that a T+2 can also last 40, 44 days. So eventually we will have time to do something like this. For sure, this is a top that defines a weekly cycle and eventually also a T+1. But we don't have yet enough bars to say this is a T+2. But we have a couple of bars, which is already enough for a B weekly cycle. Now we have to see also how long the T+5 downward cycle has taken in terms of time, because we are about to finish or to run out of time. We have 318 bars, 319, sorry, out of 339. So with the earnings release, the market has still time to proceed further to the downside, okay? And this time, though, is less compared to the probabilities that we have to have a bounce back to the upside. So for the earnings release, if they want, they can continue push further the price down until Wednesday, 19th of March, or even the 20th of March, 2025. So the risk is that we can have another month to the downside. So this is the first risk. But we also have to highlight the opportunities. So this is a T+2 that still has 4 days eventually to proceed to the downside because we have 40 days. But here we have already enough time to close the T+2. So if after the earning release we will start initially going higher the stop, then from the time of the earning release, a new cycle will take place. And this cycle can be not just a T+2, not a T+3, but eventually a T+5. And if the earnings release will confirm a new T+5, then we will have several weeks in which the price can have, let's say, a V-shape reversal. But at the moment, even with the quantitative analysis, we don't have clear ideas because we can continue to proceed to the downside. And if you even look at the weekly cycles, here it's pretty clear that we have a weekly negative downward cycle. So this is a weekly cycle that until Friday's candle has lasted 5 days. So for sure we have to expect Monday next week further to the downside. By Monday next week, we will finish at least the minimum duration of a weekly cycle because the earning release will be issued on Tuesday. So let's say you will have more possibility to the downside rather to the upside, but by Tuesday we will have 42 bars here. So let's be careful. If you're not on First Solar, I would recommend not to open long position before the earning release, but we will have to see whether this top will be just a T+1, because if this top is a T+2, forget about returning back to this absolute top at 170.70 during the earnings release. And my doubt is that here we can have a T+2. And a T+2 by definition needs at least 7 to 10 days for its development, which will go beyond really the time of the earnings release. And as said, we have even another month to proceed to the downside. So Monday, I would be careful because I'm expecting more downtrend. If on Monday we have a candle like this, then be sure that on Tuesday or Wednesday we will have to return back to the absolute lows. Okay, but here the possibilities even for the downside and to the upside are unclear, because for, as said, for the T+5 we are running out of time, but there is another month, and this from this T+2 we have other 2 days eventually to proceed to the downside and then have a bounce back to the up. So be careful for the earnings release. The market is not giving us particular information, but Monday and Tuesday red candles. On Nextera Energy, in the last analysis, I was flagging up this low as a critical swing to begin something new. Actually, if we gauge the total duration from the downward cycle here that happened on the 6th of October 2023 until that swing, we have 316 bars. If we stretch the total duration until Friday's candle, we have 344 bars. So this low here potentially can be the beginning of a T+5. Of course, it's too soon to say that, but considering that this low went not lower this one in terms of time, here we might have the beginning of a T+5. At the moment, I will put T+4, T+5, due to the fact that we have some bars that are justifying a T+4, but T+5 can be revealed soon. And therefore, if this is a T+5, the return back to this absolute top at 73.93, and also this one will be possible in the next months at 79.38. Okay. If we gauge the total duration from this swing here until this one, we have 24 bars. So we are on a rising T+2. And to begin a T+2, we need at least 7 bars that are above this low. So here for the next week, I foresee more push to the upside rather than the downside, with a target in the next 2-3 weeks that is at around $75 in correspond of the moving average 200. Here we can even update the T+2 because this is even a T+3 considering the total amount of candles below that top. Here we have 77 days, so perfect. This is in line with close to a maximum duration of a 3-month cycle here. And cherry on the pie, if in the next weeks we will go higher the top of this T+3, then we will have a cycle that will turn into a positive one and will continue to push the price further up. At the moment, from this top here until this top, we have 18 bars. And another thing that I can tell you is that from this top here at of the 11th of February, we add a weekly upward cycle that is a positive one. And this weekly cycle that is positive has reached a duration of 7 bars. So for the beginning of next week, we can have a further push to the upside, but this push to the upside can last at most until 11 bars. So this push can last until the best case scenario until the 27th of February 2025. Be also aware that we have already minimum time to eventually start a retracement from Monday onwards. But this possibility is 2 possibilities out of 6. So it's 30% that on Monday we will have a retracement to the downside, and 70% possibilities to continue up to the further up, especially if from here we have a T plus 2. So if we have to develop a T plus 2, we need several bars that are green in order to develop the cycle. So here the situation is definitely clear or clearer compared to the other stock, First Solar. So here we tend to consider more uptrend for the next 2-3 weeks. On Brookfield Renewable Partners, we have a similar situation as for Nextera, because if we gauge the total duration of the previous T plus 5 downward cycle, we have here 326 bars, which is even longer compared to the T plus 5 of Nextera. Therefore, here we have a high likelihood that a new T plus 5 is on the rise. So I will update the chart accordingly. It's a bit soon to say this is a T plus 5, so for a matter of completeness, I will put T plus 4/T plus 5. And in order to start having something concrete as a T plus 5, we have to go over the top at $24.09. This top can be considered not only the beginning of a T plus 2 or monthly cycle, but even the beginning of a T plus 3 3-month cycle. If we gauge the total duration here, we have 84 bars. So it's true that potentially we can start a T plus 3 even in the next week. But here we have already all the conditions to have at least a T plus 2, T plus 3. And as for Nextera Energy, here we have a weekly cycle that has reached 9 bars. Okay, so 9 bars, it's close to a maximum duration. So for the beginning of next week here, I would foresee Monday at least a bit more retracement to the downside to begin what? To begin another weekly cycle from the Friday's candle, which is this one, this red one, and this another, let's say another red candle will also allow the closing of this downward cycle here. So in other words, beginning of next week, we can have further retracement. To begin here, at least a weekly cycle, we need another red candle or another candle that will not go lower the stop at 23.74. And subsequently, we will have also the candle to complete the tail of this downward positive cycle here. And then we will have to see whether we will return back to the top here at 23.74. So for the time being, I will put also TU here with a question mark. So this is the higher likelihood of the pathway for the next week. Here I can put a question mark because we have to have a confirmation next week, especially on Monday. if we gauge the total duration from this low here, we have 22 bars. So eventually, if they prolong the tail for 2-3 days, we can have even the closing of monthly cycle here, but this is something that we will have to see over time. And if here we have really the T+5 ongoing, then the next target in focus will be at $24, and then the moving average around the 20, 24, $25. Okay, so that's the situation I see on Brookfield Renewable. So this swing, as said, is critical to start considering from this low at T+5, and also the resistance in this area at 24, $25 will be another test to see whether the price will continue further up and to have a proper beginning of a T+5. On Clearway Energy, in the last video, I was flagging up this swing as the beginning of potentially a T+2 or even a weekly cycle. And I was saying that if this swing would have been broken to the downside, then we would have had further downside. We would have had further downside because we were about to close the T+5. And now if we gauge the total duration of this T+5, we have 317 bars. So I was putting you aware, or in a condition to be aware, that we could have had further downside until 339 days. Okay, so that was the risk. But we didn't break this low, and hence we have started a new cycle. Now, here I can remove the arrows because that was the risk. And I can say that from this low here, we have not just a T+2, but something that is a T+3 for sure, but is also going towards the direction of a T+4/T+5. So you can see that even on the other stock, we have a similar situation in which we are closing the yearly cycles and we are beginning new yearly cycles. And this is particularly favorable for long positions, okay? Because we can buy at the beginning of a wide cycle. Considering the duration of this cycle here, we have 43 bars, hence this is not a T+3 but a T+2, so we can even remove our question marks. And another interesting thing on Clearway Energy is that here we have a T+2 that is now turning into a positive cycle. Therefore, we can expect more push to the upside until a minimum, medium, and maximum duration of a monthly cycle. So the minimum duration is 24 bars, which has been already reached because we actually it was reached on Friday. So from Monday onwards, we will have already the minimum duration for T+2, but eventually we can prolong the duration of this cycle until a median duration. In this case, it will be on the until the 6th of March 2025, up to 44 bars. Up to 44 bars, which means 21st of March. Now, the interesting thing is that we have the earnings release tomorrow. So in terms of possibilities here, we have definitely more uptrend versus downtrend, because here we have a positive cycle that has reached already a total duration of 24 days, but we, as said, we can proceed furthermore. Okay, so in terms of possibilities, we have, just statistically speaking, 44 minus 24 bars, it's 20 bars. So on Monday, there will be the first bar. So we will have one possibility out of 20 to go to the downside, or 19 possibilities out of 20 to proceed to the upside. So this is merely statistic. And if we gauge even the duration of this T+5, we have reached 345 bars, and 345 bars is more than a T plus 5 standard duration. So it's pretty unlikely that we will return back to this low here at 20 around $24.40. So statistically speaking, here we have a lot of possibility to proceed to the upside. And this is a quantitative analysis that can even predict statistically, as I said, the outcome of the earnings release. Now, from this top here, we don't have a T plus 4, but we have even a T plus 5 because the total duration here it's 190 days. So here we have, and considering also the shape of this cycle, we have a T plus 4, a T plus 5. So imagine if we will start going higher this top. So higher this top here, but also higher this top here, we will have a T plus 5 that will turn into a positive one. Now, of course, this is just imagination because we are not there, but as I said, here we have a highly chance to proceed to the upside, even after the earnings release or during the earnings release. Here we have 21 bars. The only thing that potentially we might have if there is a no positive, let's say, earning release, will be, this is the risk, 24 bars are there. The only thing is that during the earnings release we might have the retracement to close at T plus 2, but the return back to this low is extremely unlikely. Okay, so this is eventually the risk as a retracement or even like this to close the T plus 2. But since here we have a condition in which we have a positive cycle, then one possibility out of 19 to have a move of this kind, and I repeat, 19 possibilities out of 20 to proceed further to the upside. Last but not least, we have Bloom Energy. So in the last analysis, I was saying that this top represented the beginning of a T plus 5 upward cycle, and therefore we can continue to the uptrend until a minimum duration of a T plus 5, which is 189 days. So we can have the minimum duration of a T plus 5, 189, which is the 25th of February onwards. Now, the thing is that this stop was reached before the minimum duration of a T plus 5. So we add this cycle like this. And therefore, here, given that the duration is not enough until this candle to close this T plus 5, I foresee a return back to the top, which is at 29.83. So this is more on the midterm. What can we say regarding the short term, even because here we have the earnings release that will be disclosed on Tuesday 27. So let's clean the chart a little bit. So this was not the beginning of the T plus 3, but here is the minimum swing. So here we can eventually consider the beginning of the T plus 3. The duration from this T plus 4 is there because we have 62 bars. Perfect. This is something that I can clean. And the T plus 2, we can keep the beginning of a T plus 2, yes, there with the candle on the 10th of December 2024. Perfect. Now, regarding the upward cycle from the top of the 27th of November until the top that was done here on the 23rd of January, we have a T plus 2, 36 bar. So here we can update the chart like this. And without any doubt, here we have the beginning of a T plus 2. This T plus 2 has done what? Has done this first cycle here. You can see the volatility of this stock is enormous, 17 bars. So 17 bars is what? 17 bars is a T plus 1. So here we can update the charts with a T plus 1. Now, what can I say regarding the earnings release? We have more probabilities to return back to the absolute tops because we have a T plus 5, which is positive 1. And given that is a positive 1 and has not reached the minimum duration, then we can foresee a return, as I was saying, in a time range between 190 up to 339 bars. Doesn't mean that has to return back to the absolute tops immediately, but we have a time that is encompassed between that range. So if we take a median duration, we can have the return to the absolute lows by mid of June. Okay, that would be mid case scenario. Best case scenario, or worst case scenario, let's say from a time perspective, will be in September. Okay, third week of September. We have until the third week of September to return here. But regarding the downward cycles here, we have what? We have 18 bars. So we have to see what is happening on Monday, because if on Monday we will have a candle like a doji that will put an end of this weekly cycle that was that started on the 12th of February, then we will have good chances to return to, let's say, to return in a strong uptrend. Otherwise, the market is not giving us additional information because time-wise there is still room to close this weekly downward cycle even by Tuesday onwards. Okay, something like this. So on Monday, I would say we have to uh, go a little bit lower than this level. And by Monday, we will have eight bars. So we will have basically, if we consider the duration 6, we will have by Tuesday 3 possibilities to go back to the absolute tops versus 3 possibilities to proceed to the downside. Okay, so when the earnings release will be published, we will have a 50% possibility to either start a new weekly cycle or something more, or to close this weekly cycle. So it's 50-50. Hence, this is how you should be aware, or now you are aware of the situation over the short term. Mid term, I'm expecting a situation like this, but as said, there is still time to do this hookup. There is still time until September, so be careful over the short term that we will not close a weekly cycle at the day of the earning release like this. Okay, so that is a little bit the risk. But we will have also the same chance to do something like this. Okay, so here it's up to you. You are aware about statistically the possibilities to have a good or bad result by Tuesday. Mid-term, that's the situation I foresee, but short-term, there is more risk, and the decision to do whatever you want to do is yours. But at least you are aware about the timing and what can happen. So that is the last company that I have on the radar for this episode. I hope I have given you lots of insights. If you did like the analysis, you can put a like or put a comment, and feel free to subscribe to the channel in order to be notified as soon as possible about our latest analysis, especially if you have a stock that you own and you want to have an idea about the future trend or the pathway. Thanks for watching, and see you to the next episode.